All right, guys, welcome back to the channel. The markets look like they're running out of steam. We're looking at the stock markets, Bitcoin, cryptocurrencies, and of course, how this all relates back into the real estate cycle. Now, today's video is a relatively quick video, and we'll do more detailed updates in the coming video. So make sure you hit the like and subscribe button today. So speaking of this steam running out, just referring back to the stock markets for now, this has happened many times before where the volume has begun to drop off with the price ranges starting to stall out. So those ranges of the bars are getting smaller, the volume is dropping off. Generally, like we've seen in the past, you can see the lowering volume here, price ranges beginning to overlap. Doesn't mean we can't get to see another little move to the upside. But when this happens, like it did in March, like it did in February at the top, like it's done through December near another top before that correction, generally that means that the market wants to test the buying action of that previous price range. And it generally goes back to somewhere around those lows. Now, I think if this happens, obviously it's going to bring in a little more fear to the market, and that might spill over into some of the altcoins as well. And I'll get to Bitcoin in just a moment and how this all relates back to BTC and this current resistance at around $95,000. But in terms of the stock markets, it's happening on the S&P, it's happening on the NASDAQ. You can see this lowering volume. Same deal happened at those highs there, bit of a lowering volume, just a quick test, and then of course a collapse, lowering volume. Now this is underneath the average range here. Here is the volume, and that blue line is the average volume that is being bought up on a daily basis, being on a daily chart. And on the channel, you know, I've shown this at length, how it typically happens on these moves up, can continue on and then correct. So if we start to see that, we'll most likely see at least the fear hang around in fear. So the market sentiment would continue to be fearful, maybe drop back into extreme fear. But why I'm not panicking, and on the flip side of this, is that it could be leading into another higher low. Whether that low is above the April 21st low or above the 7th of April low, yet to be decided. I don't need to call that as such, but I think that this is what's going on. And it also blends nicely with the current cycle analysis that we're following here. So this is your TIA indicator suite, looking at your composite cycles as a roadmap for your investment portfolios, right? So over this quarter two, we've got a little bit of a rise here into May. And across many of the cycles, you see significant corrections into June and August. So at the moment, this is what has been tracking quite nicely with previous years like 2015 and 2005, and we get some of those corrections coming up. And in the meantime, obviously there's a fair bit of volatility that happens throughout those moves, especially off the back of such a significant decline, something like 20% with the S&P 500. NASDAQ in a similar position, and in a slightly weaker position is the Dow Jones. The VIX has also dropped off here, which is at least a good sign that the volatility is starting to dry up, to then allow the market to consolidate on this move, even if it is going to come back to put in that higher low. Now, I guess the thing as an investor that you want to see is on this move to the downside, should we get this small correction here, we want to see that fear pick up. So that market sentiment, the extreme fear pick up, all of the same sort of crap come back around tariffs and how this is going to put in new lows, and we're heading towards a major recession and so on and so forth. You get the idea about negative headlines around this period. That's what you want to see into a higher price low. So we track that at length on the channel going back to March 2023. And that was a perfect time for Bitcoin as well. That was this March low. We had the banking crisis, huge calls for recession and everything under the sun to say that the markets had to collapse from there. Now, the same thing happened here in 2024. We had those higher lows that formed. And should we get this here and we get some more fear come back into the market with a higher low, that would be another good opportunity to re-enter into any positions if you feel, or if you can see in your portfolios that you're underexposed, you don't have enough cash in there. Of course, on the flip side, you must have some sort of stops in play. What happens if it does crash here, bounce, and then continue down? Have your stops in place somewhere around any of the previous significant support levels. That should go without say, but I know a lot of the cases, we need to remind ourselves. So that's a look at the stock markets and how this might play out with BTC as well. On the short term here, that could be the same case. Obviously, 95,000 is a current resistance level, and it's basically been grinding around the same price range between 92 and 95,000 for the last several days. So firstly, to invalidate this to the upside, to see more strength in BTC, closes above 95, which we haven't got there to a strong degree because we're still underneath the previous top there at 95,129. And yesterday's was just under that. So to invalidate any sort of big corrections for BTC, some more consolidating price action above the previous high at $95,000. So if there was a correction, it may just come back to the previous 50% or back to 88,000. Anything underneath, like we looked at yesterday, underneath around 85, 86, probably just going to prolong the consolidation here for BTC. And of course, if you saw it too long and closes were underneath 80K, probably going to see that breakdown of 74. A long way off, but that's what we're looking at for the invalidation for the upside and then a corrective move to the downside. Now this week at TIA, we have 3 reports coming out. Today is the crypto and economic report, along with some altcoins in there. You'll also get tomorrow's Bitcoin update and also our altcoin trades, which go into SUI as well. That's coming out on Thursday. So lots to sink your teeth into this week. Along with that, you'll get access to the free Discord where we post regularly about the market action, just like we did back in December, looking at the top, the possibility of a top for wave 3 and a corrective move into wave 4. You can read all of this going back to those dates there as well, and essentially give you some sort of framework for the roadmap coming up in the cycle. Speaking of the cycles, the 18-year cycle, there's still been no signs of a land-led recession to top out and correct into a major recession with the US real estate prices. So the prices are still heading up nationally, and we haven't seen any signs of the real estate, the land prices, not the house because they're depreciating assets, but the land prices start to come down. More on this in future videos. Today I said I was going to give you a quick update. So USDT dominance has also continued down slightly, holding out above 5%. The key level here for the USDT dominance is a breakdown of that level, 5%. Ideally, next level, 4.75. The reason for those two, major 50% and the short-term 50%. This would be bearish for USDT, and of course, bearish generally means more money flowing into cryptos, Bitcoin, SUI, Ethereum, perhaps, maybe Solana XRP. The flip side to that is, if it is heading down, maybe the thing's collapsing. But we'll leave that till the end of the cycle. It's not there yet. For now, it looks like if this was to continue down as it is in the trend, obviously more in the face or more of this money coming out into altcoins. Which leads me over to altcoins and trying to pick the right ones here. Ethereum is still on the decline here. It's still heading down and no signs of a reversal even on the weekly chart. Any of this volume that comes in is met with more selling. Has not broken any of the swing tops. That's again swing pro with the indicator suite, which is telling us that obviously the trend is still down. Weekly bars here are all in the red. Therefore, Bitcoin is a stronger asset than Ethereum. On the flip side, you have something like SUI. SUI versus BTC has been heading up, hitting the rejection here. So basically, same sort of deal, running out of steam for now. It's on the short term. And if you were to see some sort of corrections, great. Could be an entry opportunity. Keep those stops in play. We've got the weekly reports coming out on Thursday as well. It goes into the trade for SUI. For an invalidation or a stronger move to the upside, some consolidation above the 50% levels, roughly around 3,900 Satoshis. But I know you guys are interested in USD prices. You can see it's sitting dead on the 50% level. This is of the bear market range so far, or the downtrend. Call it what you will. Basically, the market has gone from $5.36 down to $1.72 and currently sits at $3.54. This was the largest week in SUI's history. So that came in at 68%, $1.44, dead on. Can you believe it? The 50% level. So this is more about Gann's teachings and how important the 50% levels are. They get respected all the time for either resistance, support, and how you can use them in your trading, whether they're trigger levels for exiting, they're entry levels like here at 290, that sort of thing. That's what you want to be looking out for when it comes to your 50%. This is extremely helpful if you are managing your portfolios yourself. And I assume if being on the channel that you do manage your portfolios, whether it's crypto, stock markets, or anything else that you trade with a chart. you're looking at this with your portfolios, then I highly suggest getting on with TIA Crypto. Those reports are coming out this week. Plus, there is a special on TIA Premium that will go through how you can implement this for your long-term and short-term trading. I'll see you guys back at the next video. Like, subscribe, and have a great day. Peace out.